Welcome to today's webinar where we're focusing on the market of Berlin. We figure if it's good enough for Elon Musk and Tesla, it's good enough for us. And we've had around 5 years of experience now investing in this particular market. I'm delighted to have Owen Carroll with us today to talk through some of the points on Germany and a couple of the developments that we've got there. Owen is certainly one of the most important parts of the business, or his team are, because they're the guys that are responsible for bringing the projects to us. In an ideal world, when we can all travel, they're the guys that do the hard work. They get on aeroplanes, they fly to these developments, they meet the developers, they understand the fundamentals of the area and work out whether or not these projects are in turn worth taking to our investors. So it's great that we've got him on today to talk through his findings of the market and ultimately answer questions at the end. That's the important bit as well. So if you do have any questions, please save them till the end, where we'll be answering as many as we possibly can. We'll also have a couple of poll questions just to keep everyone on their toes. The first one will be in 2 or 3 slides time, and then the second one will be at the end. So before I introduce the market as such, Berlin, I just wanted to give a brief introduction on IP Global for those of you that don't know us. I'm sure most of you do. In a nutshell, we're an investment business. We help people build investment portfolios. What we're looking to do is really not find people holiday homes or resort type properties, but really property that will make them money, either through capital growth or through yield, or ideally a combination of the two. We tend to stick to capital cities, commercial hubs, central business districts for these developments. The reason why, these tend to be the most easy locations to rent out and the most liquid to sell on. What else do we do? Lettings and management. That's one of the world's worst jobs if you're trying to do that from abroad, if you're trying to do that in a foreign language to you. So we have people on the ground in the markets that we invest in to help with that, to make sure that we find you tenants and to make sure that those tenants are managed properly, money goes into your account, etc. And we'll also help with mortgage finance as well. And that's important. We'll talk more about that later, but I think that's especially relevant to the German, the Berlin market, simply because interest rates are so low and it's possible to fix these rates for such an extended period of time as well. And that's key, I think. That takes one of the major moving parts of the investment away when you can fix interest rates for that long. So really what we're offering, we're calling is an end-to-end service. So guys like Owen will get on aeroplanes, understand markets, present us with the projects that we in turn present you. Once the purchase has happened, we help with the mortgage finance and also with the lettings and management as well. So the idea is that we take as much of the administrative burden as we possibly can from you, the investor, with the team that we have. So just before we focus on Germany, a little bit of background here. I seem to remember we did our first project there at the end of 2014 in central Berlin. Since then, we've done 18 projects, invested over 120 million euros into those markets. Throughout this 5-6 year period, one of the major challenges has been securing the stock. I mean, we'll show you some statistics shortly, but one of the key challenges there is the supply-demand dynamic. Berlin is one of the fastest growing cities, certainly in Europe. It's gone from a very small base from a capital city to, I guess, a medium-sized city now. But what has happened is that the housing supply has just not been able to keep up. Now, that's great if you're an investor. That shows that the dynamics are right. But it's been a challenge for us being able to source well-priced, well-located projects in these areas. And as I say, this is where Owen and his team have come in. I think we've got an agenda here. Yeah, we're going to talk about market fundamentals, how the market has performed. Look at a more focused view on really the area where Tesla have chosen to put their largest factory in Europe, creating upwards of 12,000 jobs in phase 1 just this year. Talk about the other industry that's going on in this particular area that we're focused on. And as I say, We've got a couple of poll questions as well. And Owen, please, over to you.
Thanks, Jonathan. So just to quickly cover some of the market fundamentals for Berlin. First of all, so Berlin, they went into the COVID-19 crisis in by far the strongest position of the 4 domestic economies. So we're thinking about the large economies of Frankfurt, Munich, Dusseldorf. Berlin was shielded by global headwinds, which the other cities had suffered a bit from due to dependence on manufacturing and banking. But actually, because of Berlin's large public sector, its large pharmaceuticals industry, and its large technology center, it was actually very well shielded from these risks, which was obviously very good. From a population perspective, over the last 20 years, over 20,000 people per annum moved to Berlin. So this has had a profound effect on both the economy and the housing market. And then, as you just mentioned, there's a significant supply and demand imbalance in the housing market, which we will cover now in the following slide. So when we actually look at the real numbers of this housing deficit, so as of 2019, there's an estimated 86,000 unit deficit in Berlin. And what we've done is we've looked at the average number of completions in the city over the last 10 years, and that hasn't broke the 20,000 unit mark. And we feel that they've really been operating at full capacity, at least in the last few years. So we think we've kind of overestimated that. We think 20,000 units per annum over the next 15 years is quite a bit of an overestimation, but we want to be conservative. But given all that, we still expect that in 2035, given the population growth and that 20,000 unit completions, that there will still be a deficit of around 40,000 units. And
I guess, given that graph as well, Owen, I mean, that's one of the key contributors to why it's been so difficult to secure stock. I mean, there just isn't much around. Is that right?
Yeah, so 3 of the main factors for the undersupplied housing market. One is just a lack of zoned land in these urban areas. Obviously, all the developers have been fighting over these plots of land now for over 10 years. So a lot of them have just basically been snapped up already and have been developed on. There is a shortage of skilled labor in the housing market as well. So as I said, I think the housing market is already operating at full capacity. And then finally, just the planning procedures and the process there, it takes about 2 years for a developer to first submit the planning to the authorities before they actually get the final planning permission. So there's a huge time lag there as well. Okay, so next, I think it's important to look at what's really happened to Berlin's housing market over the last 12 months during the pandemic. So based on those strong fundamentals that I just alluded to, actually the impact of the pandemic on Berlin's housing market has been quite subdued. In fact, on average, across 12 districts in Berlin, the house prices increased by 5%. Some by more in particular districts, but on average 5% in the last 12 months. And that's a cumulative total of over 125% since the year 2009. So because of these very robust underlying fundamentals, even when the economy is rocked, the fact that the German government was able to come in and stabilize the economy, and there was actually increased demand from institutional investors who started looking away from commercial real estate and retail units into the residential housing market in Berlin has been very much a safe haven for investors during this time. Okay, so what I think it's great to look at the top 8 German cities. What I find when I start talking to people about Germany, once again, people have in their minds that places like Frankfurt and Munich and Dusseldorf, that they're the real economic powerhouses and the most economically important cities in Germany. Whereas when you look at Berlin here, it had the highest growth rate over the last 20 years of 75%. So the economy sits at just under 150 billion euro per year as of 2050, and is also expected to have the highest growth rate over the next 15 years, and will be coming in at 270 billion euro as of 2035. So not only is it the largest economy and the most important domestically, but it's also going to be the one that's expanding by the largest amount over the next 15 years.
Yeah, just go back to that last slide. I mean, in terms of the markets that we get asked about typically within Germany, I mean, Frankfurt has been the one that's consistently been requested of us. And obviously it's to do with Brexit and the financial services move to, or outside of the UK, to places like Frankfurt, Berlin. The reality is that so far Brexit has not caused that sort of exodus of financial services employers to places like Frankfurt. No question, it has benefited to an extent, but what we found is that prices there were already at a level where we thought, well, you know, yields just don't make any sense. Frankfurt's always been quite an expensive city. Munich as well. I mean, this was another city that we're asked about a lot, but you know, those values and the affordability is such that you'd question where the growth is going to come from in the next 5-10 years. Whereas what we found in Berlin, and certainly with the advent of technology startups, which you're going to talk about in a minute, that really does seem to be the sort of city that offers the most opportunity. And that's one of the reasons why we're still focused on that, despite the sort of chatter surrounding places like Frankfurt and Munich. Next slide, please.
Okay, so one very important sector of Berlin's economy, and it's so important because it's such a well diversified economy, as I just mentioned some of the sectors there recently. But well, if we just want to focus on the startups here, so there's over 3,000 startups currently operating in Berlin, and they're employing now 5% of the total working population in the city. So there's many people like startups like Zalando, HelloFresh, Delivery Hero. So these are startups that were started around between 2009 and 2011. They all have a revenue of between 1 and 1.8 billion euro as of now, and they're even the Delivery Heroes employing over 24,000 people around the world. So comes from very humble beginnings here in Berlin, but have become huge players. I think one thing that's very important when you think of Berlin startups in the context of Germany is that Berlin startups, they receive the lion's share of funding. So basically, if anybody really wants to make a go of it in a startup, they know that they really need to be located in Berlin if they want to have access to this type of venture capital. So you can see here 278 startups in Berlin receive funding in the year 2020, and they received 58% of the total funding that went into all of German startups. Okay, and then so yeah, on the topic of technology, it's been all over the news and many publications that in 2019 Elon Musk announced that Tesla had chosen Berlin for its first European gigafactory. So this has been absolutely huge news all across Europe, but very much so for Berlin. The reason, obviously, there was intense competition amongst many locations all across Europe for such an investment. But the reason Elon Musk chose Berlin, one was just because of the German prowess in engineering. Another key factor was just the availability of skilled engineers in Berlin. And then thirdly, just because it's a very hip and trendy, cool city that Elon Musk wants to align his brand with, very similarly of why he chose Austin, because it's such a dynamic city that he thought there'd be no better place to locate their first European gigafactory.
Do you think also, I mean, we'll get to it in a second. Well, here we are, the fact that up to now, Berlin has not had a functioning international airport. Do we think that had an influence on the choice? I suppose we'd have to ask Elon himself, but it had to have something to do with it, didn't it? That they're unlikely to locate themselves in a place where you can't fly in and out directly.
Yeah, absolutely. The two previous airports in Berlin, Tegel in the north and the one in the south, they were Schönefeld in the south. They were very, almost like, I kind of like them to East Midlands Airport in the UK, or just very small kind of regional airports. When you fly into the capital city of the largest economy in Europe, it's really not what you would have expected. So you're right that this airport is just another rubber stamp of Berlin just coming onto the world stage. So yeah, sorry, can we go back to the last slide for a second, please? So just while we are on the airport, this airport was delayed for quite a while, but it's great that it's now finally here. There was a 7 billion euro investment, and it's created 20,000 jobs already for the city. So that's now in operation since October 2020. The Tegel Airport in the north has been decommissioned and is being turned into a technology park. So it really is a huge step forward for the city. So what we are doing here, we're focusing on these key employment nodes and innovation centers in the south of Berlin. And another one that's really grabbed our attention is this Rolls-Royce Center of Excellence. So they've been located in this area since 1995, and they're the only place in Germany where they can produce these aviation engines. So here they have 3,000 highly skilled employees and engineers who have just produced recently their 8,000th engine. And they recently in 2019 completed their new German headquarters, which cost them 20 million euro as well. So this is a fantastic innovation and employment node, which is in the vicinity of our new project. Another one is Berlin Adlershof Science City. This one is very exciting as well. It's one of the most successful high-tech sites in Germany, and it's also Berlin's largest media site. Here there's over 1,200 firms, and they employ 23,500 people. And very interestingly, it's one of the top 15 science parks in the entire world. So again, this project, which we'll see later on, or this area of innovation, is only a 15 or 16-minute drive from our site. So absolutely fantastic to have in the vicinity. There's many of these sites, so I won't dwell too long on them, but the technology and science region of Damas-Spreewald is, again, it's about 17 minutes away in the south of our site. And this is a very much an up-and-coming location for high-tech production, intelligence services, research, and training. Specifically, if we want to focus on the field of aviation, there's some global players here, and also some innovative medium-sized companies. So there's 100 companies here employing 17,000 people. So again, just a fantastic, innovative, and highly skilled employment node. Is there anything else you'd like to speak about those employment nodes, Johnny, before we get into the district itself? No, okay.
Sorry, I'm struggling to unmute myself. Not really. I think that the key is that Berlin has seemingly reinvented itself over the last sort of 5-10 years. You've got such a diversity of employment. You've also got this financial services sector there that no one seems to talk about too much, that is very prevalent. You know, most people associate Frankfurt with the financial services center, which it is, but Berlin also has that too. You have so many of these startups, sustainable energy startups there as well. I mean, I guess it has something to do with the sort of demographics of Berlin as well. It's a very young city, and is it attracting these sorts of employers for these sorts of jobs tend to attract young people in there. So it's a sort of virtuous circle there. And I think that's helped to, one of the reasons why Berlin, in terms of population, is growing so quickly. I mean, it was one of the few capital cities within Europe that had sort of shrunk over the last 20 years. But that's certainly being reversed now, and the city over just over 4 million people, it certainly seems to be sort of punching well above its weight now.
Yeah, absolutely. So now what I'd like to do is look a bit closer at the districts that we find is so exciting at the moment, and it very much encompasses those employment and innovation nodes that we just covered. So this is the district of Treptow-Köpenick. As you can see, it's in the southeast of Berlin. It stretches from the River Spree down to the Lake District, and this proportionally has the largest area of forest, waterways, in lakes of any Berlin borough. So it's very much an incredibly livable, it's definitely the most livable district in the city. It's home to the beautiful.
So how long would that take, sorry, Owen, how long would that take to travel into Mitte, into the middle, for example?
Anywhere between 30 minutes to 45 minutes, depending where you are in the district.
Okay.
And there's yeah, so you've got the tram line, which extends all the way to the very edge of the district, and also the S-Bahn line, which will take you into the center. And also, just coming back to those employment nodes that we just spoke about, because of all of that investment that's now going into this district, it's now one of the fastest growing and most innovative regions in the Berlin-Brandenburg area. So now just to look a bit more closely at the actual housing market of that district of Treptow-Köpenick. Firstly, from a price growth perspective, cumulatively since 2013, we've seen over 115% growth in the median price per square meter. So as you can see there, it's up at about €7,500 per square meter. So that's a 7-year average of over 16.5%. Similarly, rental growth, a cumulative figure of over 45%, which is a 7-year average of over 6.5%. So while this is very much in line with the trend that we've seen over all of the districts in Berlin, this is a district where we feel is perhaps even a bit behind the curves. €7,500 per square meter is quite cheap for some areas of Berlin now. Whereas what I think is excellent here, we negotiated very hard with the developer here, and we secured pricing of between €6,000 and €7,000, so an average of just under €6,500 per square meter, where the median price for the district is 7.5. So when you see this, the luxury project that we have waterside, it's absolutely incredible that our prices are significantly below the median. So that brings us on nicely to the Development Boathouse. So what we have here is 8 villa-style blocks of apartments ranging from 2 to 4 stories. IPG has taken on 26 units in the scheme. As you can see, there's a beautiful waterside area here, which stretches 200 meters, and this has absolutely infinite views of the Lake Seddon on which it sits. I think it's important to note with our units as well that there's a €10,000 kitchen included, which would not be included otherwise with any other units in this development other than IPG's, or just generally in Berlin when you purchase a property, a kitchen would not be included as standard.
I think just before we talk about the progress, I mean, in terms of that location, I mean, we're not investing here on the basis that it's got nice views across the water, although clearly that helps massively. It's a very good differentiator for the sales market and also on the rentals market. But just the proximity into the centre of town, I mean, you know, with COVID and the post-COVID environment that we're in, many people are looking for a little bit more space, happy to commute a little bit further every day if it means they get that and they don't have to be at their desk in the city centre every day. So we felt that this is really sort of reflective of the times, really what investors are looking for or should be looking for, and also tenants as well. In addition to that, I think we're half an hour to the airport from there, aren't we, Owen?
Yes, just 20 minutes.
20 minutes to the airport, and obviously the proximity to Tesla factory and all the sort of add-on jobs that will come off of that as well. I mean, it won't just be 12,000 jobs created there, it'll be this kind of waterfall effect. So clearly that is a hub in its own right. So it's helpful, obviously, that it's by water. It's helpful that it looks nice, but ultimately it's because of the investment fundamentals around there that we made the investment, for sure.
Yes, absolutely. And so this development is taking place in 3 phases. Phase 1, as you can see, is already completed, and that has the showroom unit. Phase 2 is about halfway complete now as well. They're just about to finish off the shell, so about 12 months left there. And as you can see in the top right-hand corner of the screen, you can make out that they've just broken ground on our phase 3. So we've about 2 years to completion, but the other 2 phases will be well completed and let out and lived in at that time. So there'll be no kind of worries about the rental market or anything like that. But yeah, it's coming along absolutely brilliantly. The developer is doing a great job and very much building to the specification that we expect. So I think this is a nice time to take a look at what this area really offers. Johnny, you made a great point there that for people who maybe who may want to move a little bit further out to a very nice idyllic spot, but still have all of the amenities that they would want on their doorstep. So the 3 things we really look for when we're looking at a property: one is its location in terms of transport. So we've a tram stop, 3-minute walk from our site. So that checks that box off. All the amenities that you could want in terms of restaurants, bars, doctors, dentists, physiotherapists, play schools for children. Absolutely everything you need is within very close vicinity. But also then there's a huge lifestyle aspect to this area. There's many water sports, rowing clubs, yacht clubs, many public beaches, lots of playgrounds for children. So it's very much a family friendly area, but also everything you need on your doorstep, so you don't need to travel far. As you can see here, some of the key employment nodes that we've already covered, but this just gives a very good idea of how we're located directly at the center of them. You've got Tesla 20 minutes to the east. You've got the airport 20 minutes to the west. You've got Adlershof Science City 16 minutes to the north, and then you've got the Damas Spreewald Science and Technology Park just to the south. So for somewhere that seems so idyllic and such a nice place to live, not centrally located in Berlin, it may be very surprising to see how much investment and innovation is going on in this area in South Berlin. And as you said, this is the idea. This is the real reason that we're investing here. It's not because the scheme looks very nice, which is obviously a nice added benefit, but we're very much here for the investment fundamentals. Okay, so to get a bit more into the specifics about the actual property and when somebody decides to invest here, what they can expect in terms of payment terms. So your 9% acquisition costs, which are standard in Berlin, they're due upon notarization of the purchase contract. The next 30% is due 6 months following notarization. Now that is what we call a client shortstop date, and that is not common in German purchase contracts. This is a special clause that IPG negotiates with every developer to make sure our investors have time to get their funds together when they decide to invest. And then the rest of the payments are in line with the construction process.
I think that's just on that slide. It's important to note that, yeah, the majority of the funds aren't due for 6 months. So rather than having to find a deposit now, if someone was wanting to go ahead and invest, the only cash that outlay now would be, as Owen says, the acquisition cost of 9%, and then in 6 months' time it's the 30%. And we'll talk more about the mortgages in a minute, but the 70%, we have lending approved up to 70%. So 30% is all you would need technically to put down in terms of a cash outlay.
Yes, exactly. Okay, and that, just to cover for people who may not know about the security that purchasers have, I think Germany is certainly one of, if not the safest places in the world for off-plan investment, because they are so well protected by German consumer law. So firstly, in terms of when you make a payment to the developer, you don't make a deposit such as you may in other markets when you're buying off-plan. Every payment is due and legally can be requested by the developer because they have reached a specific stage in the construction progress. So the first 30% that we just alluded to, that would normally be due now because they've broken ground. Then the next 28% is due when they complete the shell. But basically the developer has to prove that they reach every construction milestone. They need to prove that to the solicitors, who will not disperse the money until that point has come. But even before that, the developer can't request any money until the client's name is inserted in the land registry folios. And so they have security against any payment. So they have that fractional ownership in the development for every payment they make. So this is not the case with other off-plan markets. So this is a huge, huge benefit for investing off-plan in Germany. The next points here are, again, they're clauses that we've negotiated into the purchase contracts on behalf of our investors that you will not see in any other purchase contract in Germany. So one is the rental compensation. So if the development is even 1 month late, so the completion date is the 31st of December 2022. If the developer was even 1 month late in having those units ready for handover and occupancy, he has to start paying €15 per square meter per month up until completion. Now, we're estimating conservatively that market rents in that area will be about €18 per square meter. So that's almost market rent while the construction is still going on. And then finally, the long stop date. Obviously, we don't expect to have to use this, but it's always good to have the security there. If the development was still not ready 1 year after the estimated completion date, at that point, the client or the purchaser has the option to rescind their purchase contract, pull out, and absolutely any cost that they would have incurred during that process, whether it's legal fees, notary fees, any costs associated with the mortgage, the developer will pay any of those costs. So the client can exit cost-free 1 year after the estimated completion date if they so wish to do so. On a financing side, we have 2 options available for clients. Both have indicated 70% LTVs on the purchase prices, so that's all already done. And we're looking at between less than 1.5% for Berliner Sparkasse for a 10-year fix. And then for the second option, VZN, you're looking at between 3.25 and 3.5% for between a 5 and a 10-year fix. But both very attractive financing options.
Yeah, thank you. I was just struggling to get off mute then. I mean, if we look at all of our markets around the world, this is probably about the cheapest lending that we've actually been able to source, other than Portugal, where we're able to get less than 1%. So that's probably the cheapest, but the ability to certainly fix for 10 years at less than 1.5% with one of these providers is certainly one of the most compelling arguments for lending that we have in any of these markets. Also, it is possible to offset interest against income in Germany as well. So again, that's not always the case in some of these markets. So from a lending perspective, Germany is definitely one of the better markets that we deal with, for sure. Okay, so let's just get on to a few questions here. Someone's asked, does that mean the kitchen cost has been priced into the purchase price? Owen, you talked about the kitchen. Has that been priced in, or
no? Absolutely
not.
Not.
Negotiations.
Yeah, exactly. So we negotiate that with the developer, that they have to provide a kitchen when they work with IPG, because that's what our investors anticipate.
I mean, we've got another question underneath saying, are the presenters on this call putting their own money in to invest in this project? The answer to that is yes and no. And thank you for asking that question, because it sort of leads me to the business model, how we operate. So we are not property agents. The project that Owen has just showed you, the only way we were able to secure that is by putting our funds down, is by putting a deposit down on those individual units. And the deal with the developer is that if you, the investor, doesn't buy those units, then we buy them. They go on our balance sheet. So clearly, it's good for the developer because he gets certainty of sales, and it's good for us because we secure the stock that we want to secure. If we were, I guess, down to the agency model, we kind of, to an extent, get left with what doesn't sell locally. And clearly, you know, the whole idea of working with a business like ours is the competitive advantage that we offer, which is giving you access to stock you would never, ever get to see on the open market. And that's a result of us putting down a commitment of our capital. And to an extent, that helps us to negotiate those sorts of deals with kitchens that Owen was just talking about. I mean, if we're committing to 24 units, we'll get some discounts, and we'll try and get some add-ons as well, including kitchens or whatever else. I mean, it's a bulk purchase, if you like, and anyone making a bulk purchase would accept some concessions, or expect some concessions, and that's essentially what we're doing. I've got a question here. Are we still investing in central Berlin? It's quite a long question, but he was basically saying, or she was basically saying, you know, should we all be investing outside of city centres, or is there still an argument to invest within a city centre? Owen, what do you think?
Yeah, that's a great question. Thank you for asking that one. So actually, yes, we are currently invested in central Berlin. And actually, if we look at what prime markets did the best out of so Savills have their 30 prime index. They have their world cities index, and they have the 30 top world cities. And out of that, Berlin had the highest capital growth of any European city in 2020 at 6.5%. So that prime market, which is on average just 10,600 euro per square meter at the moment, so considerably more expensive than somewhere like Treptow-Köpenick. But that prime market saw growth to 6.5% in 2020, and it also topped the bill of the forecast for 2021 at between 6 and 7.9%. And if we think of Berlin in terms of other global cities, if you look at Paris, you're looking at an average of 15,000 euro per square meter. London's more like 17,000 euro per square meter. New York, about 20,000 euro per square meter. And then somewhere like Hong Kong at 40,000 euro per square meter. So we really feel that there's still a lot of value in Berlin's prime market.
Okay, thanks, Owen. Ophir has asked a question, and actually a few people have asked a similar question, Ophir, talking about the rental caps in Berlin. Clearly that's made the news recently. Could we just explain how that works, please? Yeah,
so that came in last year, and basically the first thing to point out is that it doesn't affect any new build. So any apartment that's built after the 1st of January 2014 sits completely outside these rental regulations. So we do ensure that we're not investing in properties now that are subject to any rental caps. And basically this was a law brought in by the Berlin Senate, who normally would not have jurisdiction on rental law. That's decided at a federal level. So while it's in place at the moment, and basically what they've done is they put a cap on the rents on any of the older stock in the city. I believe it affected about 1.5 million units. And the idea was that that would suppress rents until they gave supply a chance to catch up. Actually, it's had the opposite effect in some cases, where developers aren't taking on old blocks of apartments anymore and completely refurbing them and bringing them to the market at almost a new standard, because the shell of the building may have been built in the 60s or 70s and therefore falls under the rental cap. So the law has actually been completely counterintuitive. Now it's been taken to the Constitutional Court by the federal government of Germany, and that should be decided this year. So we will find out by the middle of this year whether that law will actually hold up or not. But actually what we've seen is, in the last year, there was a decoupling between the new build rents and the old stock. So actually the new builds are now the only investment grade products in the city. So actually demand has increased once again. And that's probably why you saw 6.5% price growth in the prime market in those new builds, because that is really the only investment grade stock at the moment.
Yeah. And the magic date, is it 2014, Owen?
Yes, 1st of January.
Qualifies as a new build, right? Yeah. Okay, thank you. So to summarize that, I mean, if you're investing in Berlin, stick to new builds, because otherwise, yes, your numbers won't be what you thought they were going to be in terms of rental yields. I'm being asked about tax. How is tax in Germany, and how does it rate amongst other European nations? I can cover that off initially. Yeah, I mean, if we look at, we've looked at many markets in mainland Europe, and many of them are fairly punitive in terms of the tax legislation that they have, especially as far as foreign investors are concerned. I notice Italy has just changed the rules there, rebasing, revaluing UK property that anyone residing in Italy and is a tax resident in Italy is owning. So that needs to be looked at by, if anyone's listening, if that's relevant to anyone listening today. But generally speaking, most of mainland Europe isn't particularly tax friendly. I mean, there are a couple of exceptions. Portugal is one of them, and certainly Germany is another. Pure and simple, if you keep an asset within Germany for 10 years or more, you do not pay any capital gains tax. So I'll say that again: if you hold it for 10 years, you don't pay any capital gains tax. If you sell up to that point, there's a sliding scale, and we can send out information on that for those that want it. But ultimately, and property should be a sort of medium long-term investment anyway. For those that are prepared to take that view, and that coincides quite nicely with the time in which you can lock your interest rate in for that 10-year period as well. You will not pay any profits tax beyond that. Owen, have you got anything to add to that?
I suppose just the one point is, everything you said is completely right. And even just on your monthly or your annual rental income on the property, there's a huge amount of deductions as well that you may not get in other countries, such as 100% of your mortgage interest can be written off. 2% depreciation can be taken off every year as well. So when you look at your annual income for the first 3 years, you basically don't pay any income, and after that it's very minor.
Yeah, thank you. Callum's asked just on the mortgages, is that 1.5% rate for an interest-only mortgage or principal and interest? It's principal and interest, isn't it?
Yes,
yeah, it's repayment. Oops. In terms of other questions, in terms of yields, what sort of yields are we looking at in Berlin at the moment?
Usually 3.5% to 4%.
Okay. And again, if you're looking at cash flow there, if you're paying either 1.5 or 3.5 on your debt, then the economics start to look pretty compelling on that. But like all of these things, I think with leverage, you're never going to get a massive surplus on a monthly basis. But the key here is to harness the sort of medium longer term growth that we feel is apparent in Berlin, and it's certainly on offer. I mean, again, if you look at the valuations, I mean, Berlin is a preeminent capital city in Europe, and it's probably about the cheapest at the moment. I mean, if you compare it to places like London or Paris, prime London or prime Paris, you're really looking at a sort of 30, 40, 50% discount in some situations. So whilst we're not saying that will reach parity eventually, that gap will certainly close. The question's been asked, well, why has Berlin lagged? And one of the reasons, I think, has been the point that the sort of east and west divide that was in place for such a long time and came down in the early 90s. And, you know, after that, no one quite could work out, well, where does that leave Berlin? Where are the parts to invest in and where are the parts not to invest in? And only now, probably over the last sort of 5, 10, 15 years, has it become apparent. And if you think that people are investing in places like London or Paris or Madrid or Barcelona for, you know, longer than that, 20, 30 years, and the prime areas have become very, very well established, Berlin is playing catch up to an extent. And that's the reason why we feel that there's such a compelling reason to invest there. Any other questions? Just looking down, I think we've got time for a couple more. Do we think, we're back on rent controls, do we think rent controls could extend beyond Berlin into other cities? Are they in other cities, Owen, or is it just Berlin?
Just Berlin for now in this form. And to be honest, I do when they ask for any economist point of view on the subject, they all point to the fact that it's just counterintuitive and it's not the way to suppress rents. The way to keep rents down is actually to build more and just increase the supply of property, which this is having, as I said, the opposite effect. And
therein lies the problem. Is it a good time to exit the property market in Berlin? I've been invested there in Berlin for the last 6 years now. Wow. Well, you will have made very good money, whoever you are. And thank you for sending the question in. My advice would be no. I think whilst you have the supply demand dynamics, then the market is only going to move one way at this stage, and it's just a case of making sure that your cash flow works in the meantime. I think that if we look at the time, I think we're probably about out of time now. So just to confirm, for those of you that would like the presentation sent out, please do send us an email, and we're very happy to share the deck with you. In the meantime, I just want to thank you all very much for spending time with us this afternoon, this morning, wherever you are, learning about the Berlin market. If you have any other further questions, please do let us know. And I look forward to seeing you all in the next presentation. Thank you very much indeed.
Thanks, everyone.